Welcome to Drill Down Earnings. We have quarterly results from C3.ai. This is the business story behind one stock on the move. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research, and I'm biased on this one. I worked at C3 once upon a time. Yes, I've been involved in AI for longer than some other people, but I don't work there anymore. I don't have an investment in the company. Love the CEO because he's always been so very kind to me, so I'm biased, just so you know. This is Q2 2025 earnings. Wall Street likes a beat or a miss. This is better than the expectations of $91 million. It was $108 million. The loss, and yeah, there was still a loss, but it wasn't 16 cents a share, it was 6 cents a share. So what's the business doing here? So if we look kind of beyond the headline numbers, what do we see from this business? So what we saw is that they're still, primarily selling software with a little bit of subscription revenue, with a little bit of services revenue mixed in with that. But most of it is, in fact, subscription revenue from selling software and engineering services. The profit margins, 61% gross margins, but maybe the big number, 29% year-over-year growth is the biggest growth they've seen in I think most of the time they've been public, certainly in the last few years. They're still losing a ton of money. So despite the fact that they had, nearly $94 million in revenues, they still lost 80% more than that just from an operating basis. Gross margins, yeah, they got a little better to 61%, but those have been coming down over time generally. And service, it kind of sits in there as an important part of their business, their professional services. Generally, you don't want to see that in a software company because it means they got to send people to do stuff. The margins aren't as good as software. This company argues otherwise. They argue that that's really what they're doing is they're developing software that they were going to develop anyway for their customers, so that it should be thought of as software development costs, not actually service costs. I don't know. It's a small part of what they're doing. They don't give us a lot of numbers about how customers are converting from pilot programs to actual contracts. But they do tell us how many new pilots and new contracts they have. Pilots don't pay anywhere near as much. We don't know exactly how long they last. A few months, they say, for most of them. We don't know about all of them. But I like to separate out actual new contracts from new pilots. And what we saw was that number actually shrunk in the quarter, that there were only 22 new contracts in this quarter. A year ago, 26 contracts, the same number of new pilots. So we don't know exactly how many of these are converting to full-time contracts. We don't really know the value of those contracts. But we did see one thing that's disconcerting. It's been a problem for this company in my view. Again, a company that I care about and a CEO who I care about. But this thing, unbilled receivables. Unbilled receivables is work that the company has done and not been paid for, and not even billed the customer for. And that number has been stubbornly high and kind of shockingly high. 61% is a really high number for a company to have actually done all this work and not billed their customers, let alone received and recognized those revenues. But market didn't seem to care about that. The stock was up 5% in after-hours trading when these numbers were announced, and numbers are up 48%. The stock's up 48% in the last year. So it's been a great performer. Again, I'm not giving you stock advice. I don't own this stock, but it's been a great performer in the last year. One of the problems on unbilled receivables when customers don't pay you is you don't have the money, obviously. Well, for a company that's burning cash, that's really a problem. And this company had started, C3.ai had started to generate a little bit of positive cash flow. That would be good, except to turn negative big time this quarter. $40 million, $39.5 million in negative free cash flow and free cash flow loss for this business. And that was concerning for some analysts on the call who were saying, hey, what's up? I thought we were turning a corner this year. Maybe not, Tom Siebel. Tell us what's going on, Tom Siebel. Here's what he had to say.
To not invest in this is like kind of crazy, right? I mean, we did raise this money in a public in December 2020 for exactly this purpose, to invest in market share and invest in growth. We have been using those resources very carefully. I think we raised $1 billion and we have $730 million in the bank. So, I realize I love to read from sell-side analysts reports about our hemorrhage in cash, and seems like every time I have a quarterly customer call, I still have like $750 million cash left, so I can't quite resolve those two issues. I think if you look out into fiscal 26, we should cross in. At some point there, we should cross over into being cash positive. But right now, we're investing in market share. We're investing in leadership. And I have, the largest software sales organization in the world, selling with me and for me, and we're going to take advantage of it.
So yeah, he's talking about a partnership with Microsoft, where he hopes the Microsoft salespeople will be very incentivized to go out and sell C3 software, which he says has happened a little bit so far. He's hoping it's really going to happen a lot in the near future, a deal that was signed just at the end of September. So your big takeaway on Q2 2025 earnings from C3. Yeah, our revenues were up a lot, but unbilled receivables hanging in there. The company had an inability to generate free cash flow, and turning to free cash flow negative now for a change. Not a great thing for this business. But I think maybe the more concerning thing here is revenue growth. 29% revenue growth. Hope springs eternal. If you can sell a lot more, maybe you can make up for all your other problems and maybe even start to collect from your customers. All right, thanks for checking out Drill Down Earnings. I'm Cory Johnson. Subscribe. We'd like you to see us again soon.